the liquidity that's about to be absorbed, engaged, taken out, you're the liquidity. You're going to be used as the cannon fodder for someone else's trade like mine. Okay? So this is sell-side liquidity, yeah, but the way my son needs to start looking at these runs, from seeing this to this target, there has to be something measurable. Well, that clearly is, it's measurable. And you don't have to be in that trade there. There's lots of trades over my career where I could have got in at the highest tick, but it wouldn't afford me to fill. Even offering it by the print, by the time in sales, it traded there, but my volume and contract size wouldn't permit it to be filled there. And it ran without me. And then I had to figure out later on, as a consequence to that, I had to figure out other entry mechanisms because I would be frustrated and angry about missing those moves, thinking that if I couldn't get in that trade here, and I'm aiming for this, and something lower. Well, if I couldn't get in there, then I'm done. I'm angry and I'm pissed off, and I couldn't imagine another opportunity to get in because this was all I knew at the time. Which is why I developed the price delivery continuum theory, where it's you seeing something that's underway. I gave you what we were going to see today when we first started the stream. I wish I could have got this stuff to work like it should. It would have been a lot better. But I'm already doing far better than you're going to see anybody else talk about on YouTube. And no knocks against anybody. I'm just being honest. You're not going to see this level of detail. You're not going to get the depth of understanding. You're not going to get it beforehand. You're not going to get all the little tiny subtle nuances because they don't know. And you don't need to know this. You can buy and sell indicators and probably do something mathematically with money management and be profitable. I'm not saying that you can't, but I'm not satisfied with that. Like, I'm a technical freak. Like, I have to know. Like, I have to know why it's going to do it, when it's going to do it, and how I can trust it. So that way I can be leagues ahead, light years ahead of everyone else that looks at these same charts. That's always been my driving force, is to be absolutely phenomenal and freakish. That's been my goal. It's my pursuit. And I try to instill that in my students, but they equate that as they have to know that right away as soon as they start reading it and studying it and listening to me. And they think just because they wrote some scribble in a journal that equates to, well, I'm doing the work. No, you're just now introducing yourself to it. It has to be a lifestyle. Like, you have to constantly be pouring into these charts, listening to my lectures, really dig into what I'm saying, because I'm not talking for the sake of just talking. I'm giving you detail that you aren't going to fully appreciate, because where you're at when you first start listening to them, already you're thinking it's too long. I ain't got time for this. Give me somebody else that's going to reduce this. Give me a PDF. Let me find somebody that gives me the cliff notes. You're never going to learn from that. You'll be able to hear the buzzwords and you can talk the terminology in hindsight, but you're never going to do what I'm doing here. That will always evade you, because the people you're learning from, they can't do that. They can't do it, okay? And the things I'm teaching today, they've not been taught before. Mentorship students that paid me, they did not learn what I'm teaching you here. This is all brand new stuff. So the price delivery continuum theory is where if we identify a move and anticipate it delivering to a target that is, it's finite. It's not something that, well, it could do this, it could do that, like a zone. I don't deal with zones. Zones are for fools and idiots. We don't deal with zones. We deal with very specific price levels. If I don't know the price that I'm wanting to see as a entry, a stop, or a partial or terminus target where the trade is completely closed in, if I don't know that specific price, I'm not getting in the trade. Contrast that with supply and demand zones. Okay, what are you doing with that? What criteria are you, and if you teach it, what criteria are you teaching the people that are listening to you? What's the methodology that you're going to come to the same conclusion and process, protocol, guidance that leads you to a specific price in that zone? Which zone is important? Which part of the zone? What prices in those specific supply and demand zones are you interested in? That's why it's a fallacy. It's a fucking joke okay? It's a wonderful infantile approach to a more visual representation of support and resistance. That was the furthest accolade I gave it. And I mentioned that same stuff when I was on Baby Pits, because idiots over there said the same shit. Oh, you're reteaching supply and demand. Motherfucker, everything I'm showing you here has nothing to do with supply and demand. And it has nothing to do with support and resistance. But it tells you to the tick. And it doesn't matter what market it is. You're not getting that from support and resistance and supply and demand. You're fucking not doing that. I don't give a shit what Tom, Dick, and Harry said. Dollar mentorships, okay, and the people that run them, they need to backpedal, because if they're using supply and demand and they're trying to sell that shit, many times, if you really, really listen to them, they're really trying to teach order block theory. They're trying to teach what I do, and they're falling short of it, okay? And I know this is the part of the videos you don't like, but I have to answer all these things because people send me shit and they question me, and I fill in a lot of questions within my dialogue. And also scratches an itch once I get it once in a while, I'll have to scratch it like anybody else will. But if you have wicks in your charts, okay, every single time you have a wick, every single time, you want to be measuring them from the highest high and the lowest low, okay? Because in swing highs and in swing lows, it's going to give you detail that nobody else has. But me, good old ICT. But you're going to get to that. You're going to get it. You're getting it right from the source. If there's going to be a high, and this is on any time frame, folks, okay, write that down in your journal, in your study notes. This is a principle that is all time frames, every single time frame. And this is what you'll find is fascinating. If you go through all time frames and you study this, and to see them form on sub 1 minute charts, and it's still there, that is incredible. It is incredible to see. It's incredible to see your baby do exactly what it's supposed to do. And it's so pretty. It's so beautiful to see it form. And sometimes when the people that use it push hard and intervene with it, take it out of its processes and what it's following at the time, its script, and they cause a manual intervention, then it gets a little blurry. But if you just simply wait, it'll go right back to doing what it's supposed to be doing. Rigged, controlled price delivery. That's exactly what we have. And there's no reason to be upset about it. There's no reason to fear it. You should be thankful it's this way. Because I'll be honest with you, with 30 years experience, if these markets weren't rigged, if they were not rigged, I would never trade them, because you have the equivalent of doing the same thing that people do when they buy lottery tickets. Going to the casinos. That to me is madness. But if I can go in and I can see, okay, I can systematically prove that these things are happening. They're predictable. To a degree of precision, it presses the viewer or anyone that studies and looks at it, especially when we're doing it live, it forces them into a corner, and they're like, either this guy has a time machine or he's using delayed data and I'm using the lowest latency on this live stream. And I have students that verify it. I'm seconds away from when you see it and when it happens. And if you have real-time data, you already see what I'm annotating on the chart. I tell you where it's going to go beforehand. So it doesn't matter. It could be delayed 10, 15 minutes. It's still in the chart before it's there. And then when it finally delivers, there you go. There's no escaping it. So it's predictable. It's logic that's transferable. You can learn it. But if you're looking for turning points in price, that means short-term highs, intermediate-term highs, long-term highs. Short-term lows, intermediate-term lows, long-term lows. Where they nest out in the grand scheme of things, when you have a directional draw on liquidity that's discernible, that means that you can reasonably forecast where the market's trying to go to. Remember, that's the first lesson for you, Caleb. All of this stuff is just, once you get beyond that, when you're when you're studying for the day and you watch and observe where price is going, and you're watching the live streams like this, and you see that telling you where it's going to go, and it goes there, then you go in and you fill in your observations in the chart. You annotate how much time it took for this run from here down to that level we were aiming for. And you make notations how the body's turned right at that level. Trade it back up into the fair value gap, consequent encroachment of this wick, because it's a wick that's above price when it was down here. So if it returns back to that, that's a premium array. But I don't care about the low. You see that? I don't care about that low. I want to see it trade through that. I want to see it dig into this and go right back to that. Because if it can do that, then I'm waiting to see, does it stop? Or if it wicks through it, does the body that it pierces it with, does its body stop at or below that consequent encroachment? Because that's the signature. That's a little telltale sign. That's me at the table. I'm the dealer. Okay, I can run up a deck and stack the deck, and I can send somebody a hand of winning cards, and everybody at the table won't even know it. And they can be a confederate with me. And we run the table. Ever seen the movie Rounders? Matt Damon. And what's the gentleman? He lives in Maryland. He played the Incredible Hulk. Edward Norton. He plays the guy that does all the chops. He was in prison, came out, and while he was in prison, he was learning how to do all this stuff with cards. And Matt Damon was just a good poker player, but Ed Norton was a cheat. So when Ed Norton was dealing, he was dealing good hands, stacking the deck up for his buddy Matt. And Matt realized what was going on, and he was like, listen, I want to play for real. I don't want to get caught doing this. And he ended up getting caught. And that's another discussion. This is another discussion for another day. Just know that I really enjoy these lives, but they're almost problematic for me because I have so many things I would love to talk. I really should have a podcast. I mean, I really should have one because I could never run out of things to talk about ever. Literally never, ever, ever. But when we're looking at the wicks, okay, I want to see it go up and fail, okay, or stop. Give me that little signature. It's like me tipping my hand to another player at the table and showing them my cards, okay? Well, that's what the algorithm's doing for me and for anybody that trades like this. And before I stepped out and started talking like this and revealing this language to start seeing it this way and looking for it, nobody believed that there was an algorithm that controlled price like this. And there's always been a group of people that you're not hearing about. They don't write books. They don't go on CNBC. And they do the very things I'm telling you how to trade and engage price. They do that. And they do it on a very large scale, all day long, all time frames, okay? And they also have algorithms that are keying up off of these very things. So they're not sitting there looking for these things, okay? Quote unquote smart money traders, algorithmic traders, they understand the things I'm showing you visually, but these are the closest things that I can teach you to see the phenomenon that's going on at that moment. There's other things that I'm not in a position, let's put it that way. I'm not going to teach it. And I don't give a shit who comes to my house and says, I'm not gonna do shit. Okay? I'm not telling you shit. You want my technology? Fuck you. You can't have it. But you can have these things. You can have that. Tell me I can't? Well, I'll make more of me. Okay? So if you have these little hints, these little billboard signs flash and say, I am not going any higher, and here's proof to that you can trust. See, that's a real indicator. If you start applying things that are mathematically calculating old data for the purpose of overbought, oversold, divergence, trend following moving averages, ratios, Fibonacci ratios, if you're doing any of that stuff, listen to me, and I mean this sincerely. I know there's a lot of people that don't like me, that stand on that dumb shit. They sell courses, they sell software, they do all kinds of stuff, okay? Whether you believe them, whether you believe me or not, I'm just going to say this is the truth. Price literally doesn't give a fuck about any of that. It doesn't. It does not mean that that's what causes price to go up and down. Absolutely not. It doesn't do that. But what price does refer to is time. If it's the right time for price to move, it will move. If it's not right time, it ain't going to move. It'll just gyrate and fluctuate in a predetermined range that is mathematically calculated by the algorithm. I'm only going to go this high. I'm only going to go this low for this amount of time. And then I'll go just a little bit of that highest high in the last range, and I'll go down below the lowest low in the last range, and I'll go right back in the middle of that range until it's time to start spooling. That session starts and session endings during the macro periods, the 20-minute intervals at the top of every hour. All these things start to come together like a puzzle, okay? And when I was on Baby Pips, I was testing, laying out breadcrumbs and see, out of all the people that come here, I want to see who can pick it up, and not one person could. And then I did a mentorship. I'm going to see, can they jump and do these quantum leaps like I was getting these huge like downloads of understanding and seeing, wow, you can really see some of these things in, not a lot of it, but you can see enough in price action where the concepts, the theology behind when price and why price should do anything, there's certain times when price doesn't hide it. And that was the fascinating thing for me, because I've known it for a long time, but it was me trying to find a way where I could talk about it. And I'm talking about these little things like this. That's not really what's going on in price, but visually it's occurring at the same time the algorithm's doing what it's doing that I can't talk about. And that's the part that some of you get pissed off about. You're like, oh, well, you're hiding stuff. You're fucking right, I'm hiding something. You're right, I am. Absolutely, I am. You would too. You would too. You wouldn't even be teaching this part of it. You keep it to yourself. But I have an obligation. I have something I have to fulfill. And I have a bone to pick, really. So this is my way of doing it. And I have been successful in transferring this information with this language. It's resonated with a large number of people all around the world. And my daughter actually sent me something. I just want to toss it in because I was kind of interested by it. Last night, or yesterday evening rather, right after the markets closed, I got a text message from my daughter, and she goes, do you see this person? Do you know this person? And she sent me like a profile of someone on Instagram. I'm not on Instagram, so she has to send me screenshots to see it because I don't know I can't access anybody's account. I'm not on Instagram. I'm not on Facebook. I'm not on Discord. I don't have anything to do with that stuff. So if anybody's using my name, it's not me. But she asked me, do you know this person? Because they had my logo in their profile, which a lot of people have that. It's like a brotherhood symbol. And I have students all around the world, they're getting it tattooed on them. Please don't do that. I don't know what you're thinking, but I get it. I understand what you're doing, but the Bible says take no mark upon your skin. And that's exactly what that means. Don't do that very thing. I don't have a mark. I'm not forcing people to take a mark, and my logo certainly isn't the mark of the beast either, but there's individuals out there that take my logo and they put it in their profile and then use it as their avatar. And the person she was asking me about, I said, well, I know of this person. They're a student of mine, but what spurred that on? She goes, well, I'm looking at the new Bachelor. Apparently there's a show called Bachelor something Bachelor. Okay. And because she's a single woman, she likes those kind of shows. And apparently the new Bachelor is a day trader. And Ellis, I don't know if that's the last name or if it's the first name, Ellis something. Well, anyway, she looked at his followers and who he was following. And he's actually following something or someone that's one of my students. And it's something lab, scalping lab, scalp lab, scalping lab, or something to that effect. And they have my logo as their avatar. And they're on Instagram. And apparently this new bachelor on this TV show that does something around being a bachelor, they're a day trader, and he's following this particular person. And the question was brought up by my daughter. She goes, "Do you know this person?" And I was like, "I don't know them, and I don't, off the top of my head, I don't know who the person that's going to be the bachelor is, but he's a young guy, and it was a picture of it, so I couldn't really make out who it was because I could only see so much by zooming in. But if you know more about it, like especially if you're like in my private mentorship, if you know if you know anything about it, just send me a message about it, because I'm intrigued by it. Because I've heard my name talked out of Andrew Tate's brother's mouth. Like I'm all over the place. I'm Mr. Worldwide. But I said that to my daughter last night. She was laughing. But it's funny. It's really funny to see how far this has reached out to. Like all these individuals around the world are familiar with me, and either with me or they are familiar with what I've introduced to the community, because other people are using it and implementing it, and they have a following of their own, which is fine. I got no problem with that. I just don't like it when people try to pretend they know how to do certain things that I've never fully taught, and they try to sell mentorships, egging people on. That's fraud, okay? Because you don't know what I know. But if you've gone through mentorship, you know what I've taught in mentorship. But now that's for free on YouTube now too. So, but I digress. I got to tell you, I love live streaming because it gives me an outlet. Okay, it really gives me an outlet, so I can say what's on my mind and when I want to say it. But unfortunately, it's hard to follow me if you're here just for studious purposes. So I understand, and I can appreciate your frustration if you're someone like that. But just know that I can't not be me. Okay, and people have asked me to change for years, and I'm not going to do it. I can do as much as I can to try to do what I want to do and still meet the expectations or whatever I have in mind to do. But I also have to be me, and no one's going to change that. And the way I deliver the information is the way I want to deliver it. And I have to be happy with the way I do it, or I won't do it at all. So it takes a great deal of filtering if you're here just for the nuggets, okay? And when it's live streamed like this, like it was on Twitter Spaces, it's the good stuff being tucked in. And sometimes that's intentional. Like today, it isn't intentional. It's just me being organic, because I'm finally relaxing about the frustration I had with trying to get OBS to start streaming. It pissed me off. Like I was ready to throw this fucking laptop to the wall. Like I was getting angry. I was getting so mad, but it is what it is. But I want you to think about wicks, okay? And how every swing high and every swing low that has a wick, the information is useful if you start measuring them, finding out where the midpoint is of the wick, the highest high and the lowest low. And if we start doing that, we can start forecasting things in price action that would otherwise be it's unknown to other traders, okay? And I'm going to introduce some of the principles today. It's meant for you to go into your charts and explore it, study it. It's a fascinating subject matter. I spent years looking at these things, and finally, after 6 years, because I figured out in like less than 3 years, like two years and like nine months or something like that, I had everything exactly what I wanted. But because I have to take things apart and tinker with them, I was that kind of boy growing up. I had a Stretch Armstrong toy. I had to find out why it kept going back to its normal size. I had to figure out what was inside of it. So I cut it open, and it's like this little gel stuff in it. And I needed to know why my remote control cars worked and what was inside of the thing behind where the battery panel was. I had to take things apart to see what they did. And it mattered not to me if I could put them back together. I needed to know what made them work. And from someone's perspective that doesn't appreciate that inquisitive nature in a human mind, they may see it, well, this kid's a brat, he's a destructive person. Look at, he's breaking things up. But that was the fuel for me to be who I am today, because everything that I get involved with, I have to understand why it does what it does and how it does it. And if I can't ascertain what that is, If I can't get a grasp on it, I'm not interested. It can't hold my attention. So I have a demand on anything that holds my attention, that it has to do something for me to hold my attention, or I'm not interested. And in trading and using these concepts and not exploring price action, I have found that, and I had lots of students come through me, and the characteristics of impatience, and I need you to start saying less and just teach it and stop talking so much. You're never going to learn from me. And you're probably not going to do well with anybody else, because what you're trying to do is condense. You wanted to have a distilled version of all this information. And when you really take a step back, there's no advantage of distilling any of it, because you have to have a complete perspective, because they all link together as one symbiotic unit. It's not one thing and stands by itself. A wick, and the details I'm going to teach you about this that leads to understanding turtle soup. You thought I forgot about that? It's just the preamble here. The idea of anticipating turning points in the marketplace, which is what a turtle soup is. It's a run on liquidity, but it's not always running above an old high. It's not always running below an old low. So when I say turtle soup, it was me nodding, because I like the name, it was cute, of what I saw and read about in the Street Smarts books by Larry Connor and Linda Rasch. And I said this before, and I'll say it again because I mentioned the book again. I get nothing from it. I'm sure she probably knows about me only because I've commented to her, I think twice when I was on Twitter, and she was tagged in a response. And I'm sure she looked at me and I was who I am. And I'm sure I'm not her cup of tea, and that's fine. But I think her book with Larry was a good book. It's expensive, yes. Would I still pay that price if I hadn't bought it at that same time in 1995? Yes. I paid $175 for it. I don't know what it's selling for today. Unfortunately, it's been copied and put all over the internet. You can get it for PDF and for free. I don't want you to do that. You know, if the authors are going to take the time to put the information together like that, regardless of what they sell it for, you shouldn't take the information and circumvent the payment for their information, their experience that they collected to put it out into other people's hands. There's a lot of things in that book that I don't like, but it did help me understand stop runs. It helped me formulate a visual representation, because that was the first introduction to it. Because remember, my original mentor was Larry Williams, and Larry Williams doesn't do any of this shit. He doesn't use nothing. He doesn't use any of this stuff that I'm talking about here. Everything in my mentorship, all that stuff, technical fair value gaps, institutional order flow, inversion fair value gaps, breakers, that's not him. Okay? I had some dickhead write a book on Amazon and try to say that my stuff was Chris Lorre's stuff, Larry Williams stuff, Sam Sidon's stuff, supply and demand, and all of that is the biggest fucking lie. It's a joke. And that's why I invited everybody I purchased this horseshit book just so I could leave a verified purchase review saying this is all nonsense. You can go to my YouTube channel and you can see everything that this fucking clown wrote about is my information. And none of these other people had anything to do with it. And you asked them directly. And that's why I went out and caused Chris Lorre to answer me publicly on Twitter. I said, listen, I'm tired of these people saying that I've copied you. We're going to court if you don't do this publicly, because I didn't take shit from you. Do you see your material in my concepts, in my lectures, in my teachings? Yes or no? And he hemmed and hawed. I said, listen, you got 30 fucking minutes. And I got the emails to prove all of it. You got 30 minutes to come out on Twitter and respond publicly. And he comes out and says, no. And he does all this other extra bullshit trying to save face. But there's your answer, everybody. I don't teach Chris Lorre's bullshit, okay? I don't teach Chris Lorre's stuff. I made the mistake of giving him a nod and sending him people. And I found out through other people sending me emails saying he was talking shit about me. Listen, you bite the hand that fucking feeds you, that helps set you up, you can go fuck yourself, pal. I don't need anybody else to help me. I don't need that. I got one person in my corner, and he ain't on earth. So it's just a one-man army here. I don't need allies. I don't need people supporting me. I don't need worshipers. I don't need cult members. I don't need students. I don't need it. I don't need to do any of this stuff. I enjoy this stuff. I enjoy sharing it. And it just pisses me off when I see other people lie and they discredit me and say, oh, well, you didn't do this and you said this because it's somebody else's stuff that's over here. It's horseshit. You got $5 million. I'm going to remind you all, $5 million. You come forward and you show where any of the stuff I'm teaching is found anywhere prior to me. And a lot of this shit was codified in 1996. Prior to that, it was conceptually being discovered. I was figuring out certain things, but I put it in a format where it is linked to me, 1996. And then all of a sudden you hear about stories about, as a market maker that was flying on an airplane, and I met this guy, and then all of a sudden that's urban legend. But you're hearing it right from that person that guy's talking about. Hello. Think about it, folks. I've been around the block for a long, long time, multiple times. I've had more personalities online than you realize. Inner Circle Trader is just the longest one. A lot of big names have their hand in my cookie jar. Let's put it that way. My hand's not in theirs. So let's talk about the wicks, okay? I had fun, so let's get into the nitty-gritty with it. If we refer back to this one here, as I mentioned, if price is ever reaching up, okay, if price is ever below it and you have a reason to suspect that it may go up for the sake of retracement, for the sake of a long trade, and it is likely to continuously move higher, you have to contend with the information that's being presented inside of the wick, okay? Inside of that wick. What specific information? If you're below it, it's going to come up into that midpoint. The midpoint is consequent encroachment. Why is it not mean threshold? Because it is a gap. Gaps, midpoints are always consequential to its return back into that range of that gap. So consequent encroachment. It's encroaching on the mid part of that gap or inefficiency. So because when I look at a wick, I treat it as a gap. Even though it moves in one single candle, passing from the open of that candle down to the low, I don't care how long it takes doing it. That's not an important factor. The visual representation of that is enough for me. Then I go right in and I measure it. If it's a long range wick, something like this one over here, I'm going to get a very specific calculation and I want to know the very number. But if it's short like this, I can eyeball that and say, okay, well, we're in close proximity to the 6 p.m. opening price. We're also approaching the consequent encroachment of this gap, which is this candle's low and this candle's high. So half of that. Okay, so here's a convergence of 3 things there that build on, this is a good idea to anticipate lower prices. But you already knew lower prices were in order back here when I finally got the stream going. You knew yesterday that this is where the NASDAQ could potentially reach up into if it was going to continue to move higher. Look at the turn there. What is this candle doing right there? This one. What's this candle right here? What is it doing? It's trading below that short-term low. Yes, absolutely it is. But what else is it doing? It's validating this candle as an order block. What kind of order block? It's a bearish order block. So once we get below and close here, we have a shift in market structure. But before we do that, that order block is validated. That's the change in the state of delivery. What does that mean? What does that mean when I say it's a change in the state of delivery? This candle opened and there was buy-side delivery. That means the market's moving higher. It keeps booking and offering higher prices. That is buy-side delivery. It's going up to go into that inefficiency I told you yesterday that would be an upside objective if it continued moving higher. It's also taking out this high here, this high here, this high here, and the high formed at the 8:30 news driver and release that it created there. So it went up there and kept that gap in play. That old new week opening gap on July 28th of 2024. some old reference point that everybody knows about, these gaps, ICT, but nobody was doing this with them. Nobody was extending them in the future. It was filled. All right, that's done. Cast it out now. It's no longer valid. It's one and done, over. No, it's not. I've had so much fun over the years watching people literally talk about price action, and it's staring right at them every single day, every single week, for weeks at a time. And it's completely, they're oblivious to it. And they're taking trades that would otherwise be contrary to what that implies. Hey, I'm going to go long. We broke out above here, so it's probably going to keep going because they're a momentum trader. And they don't know this information. They don't have this information that you were given yesterday. Do you see a repeating phenomenon? Like, I'm always able to tell you with these concepts what is the most salient, and then the market behaves around them as a manner of proving the concept, the logic, and the predetermined aspects. It's before it happens, not after the fact. It's before it happens. Because if these things don't have a logic that I'm able to tap into, and it never is deviating or changing or morphing into something else, that means I'm confident. That means I'm, to a lot of people's perspective, I'm arrogant and conceited and narcissistic, okay? Because I'm absolutely confident that this is going to continuously keep working. That's why when I talk, I don't sound like I'm second-guessing myself. I speak with authority. That's why that tone is always there, because it's mine. It's mine, okay? And I'm sharing something that you wouldn't otherwise know about. But if we look at these elements, and you introduce the idea of swing points, if you're trying to capture a reversal pattern, okay, there's two forms of reversal I want you to think about, okay? There are reversals for the sake of changing a buy or sell program into an opposing buy or sell. Meaning this, we have the market's been going higher prior to the 8:30. We've had this, all this consolidation overnight, all this meandering around. We had the stop hunt, rally up, and then go to where we were talking about yesterday. All of this is higher than where we were trading yesterday at the beginning of the stream, 9:15 or so yesterday, Eastern time. So it's been going higher. And it went to some random level that was given to you in advance yesterday. And then it behaves like this, breaks down. So we've been a part of a buy program. It's been going higher. We had to wait for the news driver this morning, and it continued going into the upper, higher premium levels that we talked about yesterday. Towards the end of the stream, I gave you, okay, what do we do with it now, where it's at? And I walked you through certain aspects of where the price could go if it's going to remain going bullish. Here we have it. It trades up to it here, and then it folds and drops. Now, if I didn't teach the new week opening gap, if you didn't know anything about this concept, okay, this run above this high, for a majority of you, you wouldn't expect that type of reaction, going there and then breaking down. You wouldn't expect it. If I wouldn't have taught fair value gaps, you would have never even looked at this area here as a point of interest for you to study it, using it as a point of entry going short. If I wouldn't have taught breakers, which is what this is, high, low, higher high, that takes out liquidity. But notice it's taking out liquidity, and then it's going somewhere specific. It's not just going above. It's not, oh, this is an engulfing candle. It's a FU candle. That's an institutional candle. It is not an institutional candle. This is an order block. These two candles here, but it's that opening price. That is the change in the state of delivery. So when I say it's a change in the state of delivery, Caleb, I'm telling you that what was in play prior to those candles formation? Where was the market going? Up. So that means the market was in buy-side delivery. Suspend your disbelief for a moment, okay? Just Give me the moment to speak in these terms. If you're one of those individuals that are in the audience listening and you think there's no algorithm. Bro, I work at so-and-so investment bank. There's no fucking algorithm. Okay, come out here and do this, what I'm doing. And I'll walk circles around your ass. You can use all the bullshit that Goldman Sachs and all the fucking city, all the shit that you use. You come out here live stream and I'll tell you every fucking 1 minute candle and I will call it all day long. And I'll run circles around your ass. The invitation is open. It's open. If you want to come out here and get on Blast Street, come out here and get on Blast Street because I will make your shit look like Mickey Mouse romper room nonsense, okay? The change in the state of delivery in this instance is we move from buy-side delivery. That means it's being offered higher prices, not because of buying pressure, not because of an absence of selling pressure, okay? It's algorithmically delivering to a fucking level I gave you yesterday. How's that possible? How is that possible if the markets are random? If it's not rigged, I couldn't do this stuff. I couldn't sit here on a live stream with the lowest latency and point out certain things in price action, and they deliver over and over and over again. If they weren't rigged, I couldn't do that. But because they are rigged, you should find solace in that. You should fucking walk around with a heart on. You should be thankful that it's like this because it's something that's going to repeat. And it's going to give you a happy ending every fucking time you use it because it's there for you to take it. It's there for you to take it. But prior to me revealing it, it's an unknown. It's something I had fun with. They're my toys. So the change in the state of delivery at the opening price of an order block flips it from, in this case, from buy-side delivery, offering higher prices. Again, don't think buying selling pressure. Just think it's going to offer until it gets to that price level right there that you knew about yesterday. Then, does it reject it? Yes, it does. Does it overshoot the opening price? Right there it does. And I don't need to see it close below it. F you, candle. These fucking 20-year-olds. But there's 20-year-olds that'll eat that shit up though, won't they? Chairman. Chairman. They call themselves fucking chairman. Sit in their fucking chair, boy. You don't know what you're talking about. The opening price is the change in the state of delivery. In this case, as soon as we get that crossover there, the algorithm changes its state of delivery from buy-side delivery to sell-side delivery. Oh. So that means it's going to refer to this price. It can color a little bit above it. Up to, how much, Michael? How much of a gray area is this if it wants to trade back into that mean threshold? How do you properly outline that? You take the opening price. Man, I should be charging money for this shit. If you like what you're learning today, if you're really having a good time hanging out with me and learning shit that nobody else on this planet's going to ever teach you, the stuff that really works that causes these markets to turn on a dime, on a time schedule that you can predict and expect and forecast weeks and months and years in advance, if you're having fun, I'd appreciate a thumbs up. You guys got real lazy the last few times. You haven't been giving me thumbs up. I told you, that's our currency here. That means that I'm hitting the sweet spots. I'm touching your G-spot. I'm tickling your ass with a feather. I'm giving you things that you've been wanting all this time. I'm delivering it. And I'm doing it over a live stream. What else could you want? What else do you want? You want to see me trade? You'll get it. It's coming. But I got to give you the logic that we're using. So that way you can see every time I'm doing it, oh, it's the same shit he talked about. Yeah, it's the same stuff all the time. But this rally up in here, okay? The body. The wicks are what? That's where the little, like the fuzzy areas, the parts that, like your child that colors for you. They're coloring the picture and you see them color outside the lines a little bit. Again, I mentioned the analogy last week. You're not going to scold your child because they colored outside the lines. You're going to be like, they signed their little name, probably misspelled something. You're going to go to your office at work or you're going to put it on your refrigerator at home and you're going to celebrate it. It's to you meaningful. Well, you're not making a big deal about your child coloring outside the lines. So I'm not making a big deal about my algorithm coloring outside the lines by these little tiny little nodes of errant price action, where it just goes just a little bit outside of it, because they're all coded too. That's where the damage is done.